Today we're going to be talking about the beginning of the month. We're going to look at a couple of the best trade setups that fit my 50 pips a day system from this week, and we're going to run through our process and also look at our 50 pip box. You don't want to miss this one, traders. We'll be right back. Good day, traders. I'm Stacey Burke from Stacey Burke Trading. It's Thursday. A couple of really big days in the markets. Some traders have knocked it out of the park in the US session. There's been some big moves on the pound yen, the pound Canadian. Great to hear. That's exciting. I really love it when traders message me and tell me that they've had some just absolutely fantastic trades. Today I'm going to go through and review my simple process about how I go to the screen each day. I've simplified a couple of things. We're going to reinforce some of the simple things that I look at each day about what markets do, just to try to remove the veil of what the price action can do to confuse you, just to simplify and just keep thinking simple. So I look at the daily charts and I look at the month, the end of the month and the beginning of the month. I look at that the same way I look at the new day when we come to the screen. They reset the book, they lock in profits for the month. The daily charts in the monthly cycles trade off of 250 pip increment quarter levels. So similar to the daily charts where we look at round numbers, the daily charts work off of double zeros, 750s or 750, 500s, 250s. We're going to look at some of those screenshots from the major pairs today and the numbers and the boxes that they trade inside of, and the same principles apply. We talk about the three things that markets do. Every time I go to the screen each and every day, I look at the 50 pip boxes. Regardless if we're trading up in a quarter level or we're down inside of a 50 pip box between 0 and 50 or 50 and 0, I look at that market in terms of how it's traded in Asia. It might be inside of a 25 pip box, the high and the low. It might be in between two 25 pip boxes. But then the next question I ask is, when they expand the range, does it break into another 50 pip box, or does it stay inside and work off of numbers when it hits the high and the low of the day? We're going to review some of the best setups from this week that were just textbook perfect in terms of just sticking to the three basic things that markets do. They break out, they pull back, they fill more orders, and they continue in a trend. Some of them have broken out, pulled back, and reversed for a false break reversal. And sometimes we've had both of those in the same day. One in London, one in the US. Or they break out and they go into a trading range. And Monday was a textbook example of this, where it was a 50 pip range. London hit the high, the US hit the low, but there was 50 pips in both directions. Now again, just to reinforce, I don't get every one of these trades, but every single pair falls into one of these three categories. We're going to look at some of the major US crosses as well, just to demonstrate that it doesn't matter what instrument there is, you will often find the same behavior on all of those pairs. Then I look at the 12 candle window, because those are the times when we typically will either have a stop hunt to the extreme, to the high or to the low. We'll get a trap, which is part of that stop hunt. That pulsing momentum gets traders chasing the move into the extreme, thinking it's going to be a breakout or a measured move, only to find out that the market reverses in one candle, which is completely contrary, in the majority of cases, to all the indicators, which is why a lot of the indicators get traders chasing the trend, and they think this is going to be going because my indicators are momentum based and they're following, or they're swing based and they're following that move, and then all of a sudden in one bar the market reverses, usually off of numbers, for a move of 50 pips or more back in the other direction. It will usually occur in an engulfment or a form of an engulfment, like a 3-bar pattern, a 2-bar pattern, or a pin hammer, or both. So just coming back to this monthly cycle, the market is always in a box. And the market, if it's in a box, is going to do one of three things. It's either going to break out and trend, breakout, pullback, continuation, or it's going to break out, pull back, and reverse and go to the other side for a false break reversal, or it's going to break out, pull back, and stay in the trading range. The daily market, the daily charts do this on any instrument. We might be in a trending market and all of a sudden it goes into a trading range. It might be in a trading range and all of a sudden it breaks out and goes into a trend. So we're going to review some of these on the daily charts, because at the beginning and the ends of the month and in the middle of the month, similar to our intraday 15-minute charts, we'll see the same patterns play out, except that when I look for an engulfment or a pin hammer at numbers or at the high or low of a month, and I can identify that on my daily charts, then I'm going to really focus in hard looking for the same setups that will allow me to participate in that move for maybe 200, 250, maybe 500 pip trade. But we've been able to position ourselves in the market. And again, when I get in the market and I'm able to be in a move that's potentially going to continue through, we're looking at a 1-bar stop. And these are some of the trades where traders are able to get maybe 5 or 10 times or more in some cases return on their initial risk. So again, let's review. The high and the low of the day. Each day, specifically Asia, will give us a high and a low. There will often be a high and a low from a previous day's high or a previous day's low. But when Asia starts to trade, it will give us a high and a low, and it will either be inside of a 25 pip box or it will be spread out over 2, 3, maybe 4 boxes. Like yesterday on the pound yen, it was a 100 pip range. But we have our high and our low in place. Where are the stops? The market may within that paint a new high. It may break out. It may break out and trend. It might break out and pull back and stay inside of the high and low. Or it might break out, pull back and reverse and go to the other side. How big is our box? Is it 50, 25 pips? Are we inside of 0 and 50? Are we inside quarter levels around a major round number? That's where our high and our low have very much importance, because why? That's where the money is. The number one thing to remember is that all highs and lows have stops in place. And that is where the money is. There's somebody who's in profit. And when the next session starts, one of those two people, maybe both, are going to get their stops hit before the market makes a move or breaks through for a measured move. So if a person has a stop there and they lift it, or they don't have a stop, whatever that may be, and you're in a measured move, now your stop could blow out 3, 4 times of what it was initially. So it's critical, as I always say to myself, something somebody told me a few years ago, 20 pips. You can recover from a 20 pip stop loss. So when I'm in a trade, especially if I've maybe increased size or I've taken on more risk, I know that I can recover from a 20 pip stop. But if I allow that stop to blow out to 50, 75 pips and I've had size on the trade, now I know I'm going to do psychological damage as well as financial damage. So it's really important that I keep my stops tight. Once I've identified my 50 pip box, I can start focusing on what is this market doing. Is it trading is it trading from the high to low? Is it in a false break reversal to the other side? And sometimes the highs and lows will be outside of that 50 pip box, but it's the 50 pip box that they're trading in. Or do I have a breakout pullback and now they're going to layer underneath or on top of that 50 pip box, or possibly inside of it for the measured move? Really important. And then the 12 candles, 90% of the time the trade is going to come within that 12 candle window. The exception, of course, which we talk about, is 717, is if they do the stop hunt in that hour prior to the 12 candle window, and that will usually come in the form of a 1, 2, 3 and a reversal off of numbers. When we head into the 12 candle window, the engulfment is already in place, and now we want to position ourselves with an entry pin hammer at numbers or something for the continuation move to the other side of where those stop losses are. Engulfments and pin hammers, you've been following long enough, a lot of traders have started to notice the 3-bar patterns. Some of them are not full engulfments, and then the next bar will be the breakout candle, which confirms that engulfment. And this is where I talked about the high bull and the low bear, meaning the lowest bear candle and the highest bull candle, because sometimes you will get 2, 3, 4-bar patterns that eventually engulf the high bull or the low bear for the move in the opposite direction. So I come back each day and I talk about identifying the box. The 50s and the zeros are the round numbers. When the market extends into an upper quarter level or a lower quarter level, that will either be an extended stop hunt or a breakout for a pullback and a continuation. Sometimes the pullback will come into the box because they're stop hunting down and buying off of the numbers for the move back up, and vice versa underneath. They might break out to a level down at the bottom of double zeros or 50 and pull back inside for the continuation and the measured move, and then do the same thing underneath. So it's always about these 3 things: breakout, pullback, continuation, trend; breakout, pullback, reversal, false break; breakout, pullback, trading range. So we'll take a look at some of the daily charts and look at the boxes that show up in those 250 pip increments. And again, if you understand that average monthly range, these pairs will vary between 200 and 300 and 400 pips. So we're talking about 1 and 2 boxes, but also the highs and lows of the month. Very important. And then we're going to look at a couple of pairs, not only from the British pound crosses this week that have been absolutely textbook perfect. Structure, high and low of the day, timings, round numbers for 50 and 100 pip moves right in the 12 candle window. Then we'll also look at some of the US dollar cross pairs. Again, some textbook perfect setups on the euro, the Aussie dollar, crystal clear, right out of this process. I love it when I see these set up on every instrument, because the same things happen over and over again. Because why? Because we're focusing on the high and the low. That's in every single market. Number 2, they all have number levels, round numbers, double zeros, 75, 50, 25, double zeros. Doesn't matter what instrument it is, it all has numbers. Then they all do the same 3 things: breakout, pullback, continuation, false break, reversal, trading range. And they all move around when the equity markets open. Whether it's commodities, metals, softs, they all move when those markets are open and trading in that 12 candle window. And price action is constant in terms of its behavior through every instrument. Each instrument may trade a little differently in terms of its range. It may trade a little differently in terms of its average daily volatility, those sorts of things, because they all have unique personalities based on the traders, the institutions, the commercials, the participants that trade those markets on a regular basis. So they will have certain behaviors that will show up maybe subtly differently from other major instruments such as currencies and whatnot, because of the major players that create those behaviors through their trading. So let's take a look at those charts. Again, keep it simple. I love this because I can go and duplicate that every single day. Am I going to get every trade? No. But if I manage my risk and I keep sticking to the basics, my results keep getting better. And as I get better, I review, assess, and try to improve each and every day, each and every week, and then scale it up in size. So hopefully you got some value out of today's video, traders. Tomorrow we're going to talk about end of day versus day trading. I've had a lot of traders ask me why I'm no longer end of day trading. We're going to expand upon that because, as I said here, technically every single day I am trading end of day, but I'm using my 15-minute charts to enter into what I hopefully can identify as the highest probability trading setups for that day in that session. Keep it simple. Keep getting better. How good can we get, traders? Have a great day, and may the markets go with you.
G'day traders, Stacey Burke from Stacey Burke Trading. Just continuing our discussion on the beginning of the month. I look at all the major pairs each day as well as the British pound pairs. And you'll notice I use round numbers and quarter levels. These markets tend to trade off the 250 pip increment levels. And obviously, if you think about average monthly range, that there's a scenario that ties in with these quarter levels, same as they do on the intraday. But at the beginning of each month, I'm looking, are we, inside of the high and low? Where's the setup? Usually the beginning or the middle or the end of the month will be setting up for us. And I look for this, and then I tie that in with my 50 pips a day system, because I want to know if I have the opportunity now to possibly participate in at least 250 pip move, maybe back on a stop hunt to a profitable trade, or maybe more. So we may be targeting a position where I can enter a trade, and then I'm looking at maybe taking part of a trade off and letting some of that run for a bigger move. But highs and lows, numbers, engulfments, and pin hammers, same scenario that I look for on the 50 pips a day. So we come to the end of the month and we have a double inside bar. We're above numbers. The market broke out. It pulled back. That breakout failed. It came back inside the 250 pip box and then went back first day of the month, broke up to the top of the range, broke out, sideways pin hammer. And again, Monday to Friday, these cycles will play out with our weekly templates on the 15-minute cycles. We'll continue these moves. We go up to the numbers. They hit stops. Bullpen hammer at the numbers for the engulfment back inside. And you'll notice that engulfment took out 3 candles, went sideways at the numbers for a bear pin hammer, dropping back inside of the 250 pip box underneath of the round numbers, pulling back, engulfment again for the continuation down, hitting stops on the swing low to the numbers before coming back 1, 2, and today maybe number 3. Or we might hit the high. But depending on what's happening, we may have another possible 250 pip move down, maybe a 250 pip move up. And that's the sort of stuff I look for on the dailies to line myself up with the 15-minute charts. Looking at the euro, interesting scenario today on the euro. We had a bullpen hammer yesterday at the numbers as our first bar of the month. We have swing stops above the 1350 area. And of course, the market had 1 push, 2 pushes, 1, 2, 3 inside bar, bull engulfment, bear stop hunt pin, bullpen stop hunt, before closing back at the numbers. So again, now this may be an interesting pair I might look at today, because there's 100 pips between where that bullpen closed, bullpen hammer at the numbers, and the swing high from last week. So just opportunities. The Aussie dollar trend trade. So we break out, pull back, retest the numbers, hitting the stops on the little bull candle at the numbers before continuing the move, taking out the highs, pulling back, layering on top of that breakout, pulling back, and then engulfment, breakout again into the upper 250 pip box, breakout, pullback, continuation. End and beginning of the month, the middle of the month, the end of the month, breakout candle into the upper 250 pip box for a 250 pip move up, ending at the numbers, bullpen hammer, engulfment, going sideways, 1 push, 2 pushes. This is our 3rd push into the bullpen high on the Aussie dollar. So it could be interesting to see if this market either breaks back through or fails and we get a move back down towards the low of that box. Stop hunting traders who are long and not going anywhere. So again, just I look at the numbers, the high and the low of the month, engulfments and pin hammers, beginning and the end of the month. Now looking at our our British pound, just going back over the basics. We're in a 25 pip box. We get a high and low of Asia, high and low in our 12 candle window of Asia. The market breaks out of the 25 pip box, taking out the lows, breakout, sideways, micro double bottom on a smaller time frame for the W reversal. Bullpen hammer at the first candle of the 12 candle window, pulls back inside. 1, 2, 3 down. That's a false break reversal. Breakout candle, stop hunting the high whenever you see a vertical candle that's 25 or more pips that goes straight through a high or a low. That's a stop hunt. 1, 2, 3 down, sideways, a 4-bar engulfment, hitting the stops before giving us a tweezers pattern, and then hitting the lows on traders that were long. Not only long in the middle, but would have got traders down low, either at break even or depending on where they got filled, and then sideways into the 12 candle window. So breakout, pullback, breakout again, pullback, engulfment, bullpen hammer after hitting the numbers. 4-bar consolidation at the redrawn low of the day. 1 push, 2 pushes, 3 pushes, stop hunt, sideways, bullpen hammer for a measured move up. 25 pip box, breakout, pullback. That's a false break reversal. Breakout, pullback, breakout, pullback, continuation. Pound yen. Market drops 100 pips before giving us an engulfment and a low of the day as we head into the Europe 12 candle window. 100 pip box from top to bottom. Again, we're in a 50 pip box between 50 and 0. Breakout, pullback, redrawn high of the day. Market goes vertical, hits the stops, first candle of the 3rd hour, and then comes 1, 2, 3 down at the numbers sideways. 3-bar engulfment before hitting the stops one more time at the double zeros, at 50. 3 bars engulfment for the 50 pip move down. Stop hunting the low of the day as we head into our US session 12 candle window. We get an inside bar. This is an example of a 3-bar breakout pattern, but also low bear. We've had a 50 pip move down. We've hit the stops. The market goes sideways, inside bar, breakout. 1, 2, 3 to the high, pullback, continuation for a measured move through the high of the day. Into the upper 50 pip box for 100 pips into the breakout of the double zeros. British pound, again, 50 pip box, breakout, pullback, breakout, continuation. Pound Canadian, we get an engulfment at the end of the Tuesday session. Traders are short. Market continues down in Asia to the double zeros. Pulls back. Breaks down into the lower 25 pip box. We have a redrawn high of the day. A low of the day that gets broken. They pull back into the double zeros before rolling over. Stop hunting the low of the day. Again. 1 push, 2 pushes, 3 pushes down before boom. Vertical stop hunt through the redrawn high of Europe, London, and hitting the high, swing high of Asia. 1, 2, 3 sideways. 4-bar reversal engulfment off the numbers for the move. So we've come out of the 50 pip box, 25 pips. Breakout, pullback, false break reversal, back to the upper 50 pip box. Pulling back 25 pips into the US session 12 candle window, breakout, pullback, continuation, sideways, continuing the move. Double zeros and 50s, 50 pip box, a 25 pip extended stop hunt, breakout, pullback, false break reversal, continuation through the high of the previous day, hitting all stops and extending the range another 100 pips. Hopefully you got some value from today's video, traders. High and low of the day. Timings, round numbers, engulfments, and pin hammers. 50 pip box, quarter levels are extensions, or breakout pullback continuations. Stay disciplined, stay focused, keep getting better, and have a great trading session. May the markets
Hi
go
traders,
with
it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.